wonderful okay. All right, let's go back. Let me not share. For some reason, my boot camp is missing. And again, I don't know how that goes off my desktop and why this other stuff shows up on my desktop, because I don't want this other stuff on my desktop. But it seems to show. So I put the Maryland one up there yesterday, and but my boot camp disappeared. So my Virginia boot camp, my Maryland boot camp. Any of you guys use Macs? MacBooks or anything?
No, Johnny does.
Yeah, I got mine because it was lighter weight, because I have nerve damage on my left side and some other things. So I'm only supposed to carry like no more than 10 pounds at a time. So anyway, it gets to be quite annoying sometimes, because for some reason it just does not, I'm so used to the PC, and there's just certain things like it doesn't seem to function as well through here. So, all right, can you guys see the contracts class?
Yes.
Okay, great. So like I said, all right, so we're going to go down to the miscellaneous documents, which were all the addenda are. I'll start working through those. So when it comes to the leases, when you're calculating proration, remember, use the 30 days a month for the calculation. So if it's $2,000 a month, just kind of go back to that. Someone had a question about that. So if it's $2,000 a month, you divide it by 30, which is $66.67, because you round up that penny. And then, but if the month has 31 days in it, then your multiplier is times 31. If the month has 30 days, it's times 30. If it has 28 days, etc. But you use the divisor as just 30, not how many days in the month there are that particular month. That's more or less the standard. Now, every now and again, you're going to run into an agent who's going to not agree, and it's really a matter of a few cents difference, but just say, that's the standard that your broker advises you to use. Okay, and most of them do use that. Okay, and don't go into using the 365 days or the 366 days. It's just unnecessary to be that complicated. It just changes pennies. Okay, so this document, acknowledgement of receipt of notice, okay. It is it's a newer document. So the undersigned person hereby acknowledges that this sales contract notice was delivered to him or her on such date, and insert the address. So when an agent sends something to another agent, and it's a unilateral notice, we always ask them to send us an email back stating that they received that notice, because it's a unilateral communication. So if I represent the buyers, I'm sending a unilateral notice to the listing agent as the buyer's agent of something about the notice, like, remove a contingency or something. Well, if the, what's happening oftentimes is the other agents are not responding or what have you. So this allows them, particularly with faxes and stuff, to notice back to us that they received it. Okay. Now, we don't fax a lot anymore, but that's predominantly what this acknowledgement is for the faxing. In an email, hi, are you here for boot camp?
Yeah.
Okay.
I'm so I've had the worst time like sleeping lately.
No, it's okay.
I have been going to bed like 1 and 2 o'clock in the morning, and I don't know what's going on.
What's your name?
Jennifer.
Jennifer.
We've met.
Okay.
Yeah.
I can't just remember names.
But I've been working on listing.
Okay. So do you have the book with you?
What book?
The boot camp book?
No.
Okay, so I'll bring this up. Guys, just hang on a second. I have someone live in the classroom. I haven't been connecting to the screen behind me because it's just been me in the room, but let me go ahead and connect. Hopefully it won't mess up our Zoom.
Are we live too? Okay.
Yes,
Okay.
there's quite a few people online,
Oh, okay.
but you won't be able to see what I'm talking about if I don't hook up.
Okay.
And I'm out of the hard copy books. Everyone's who's come through class physically have all taken the books.
Oh, really? Oh, I like.
So this is the last day for this one, and then we're going to start over again on September.
Oh, today's the last day? Okay.
Yes, and we'll start back over in September.
Okay, I'll take it then.
Yeah. But you're welcome to listen to.
I used to do bar contracts, so that's why
Okay.
the Northern Virginia are a little tricky for me. I'm always asking cases.
All right. So right now we're going through all the miscellaneous documents and all the
Okay.
the contingencies and such.
Oh yeah, that's what I need actually.
Well, good. So perfect timing. Can you guys still see what's on my screen on the computer?
Yes. Yes.
Okay, thank you.
No, I don't need my computer open, do I?
No, because you're going to see it up here.
Okay.
Okay, now it's shrunk, so I'll try to make it larger again. Okay, all right, so there's for Jennifer. All right. So again, this acknowledgement of receipt is predominantly for the faxing here, because when someone faxes something, you get a notice that something's been faxed to somebody, that it's been received, but what's happening, it could be going to an office, and then that person may not be getting that fax. So it's just a document that can cover you as an agent to make sure that someone's receiving what you've sent them, okay? Now, just like with the rentals, there's an addendum for rental, then we have the addendum for sale. This is known as your blank addendum. So when you look through your documents in command, I don't know if they're calling it a blank addendum or just an addendum. And sometimes they'll give you 2 or 3 versions of it to use, because you may have more than one addendum in a contract for different things. And remember, addendum means you're adding something to something that's already existed, the word add. So that's your giveaway.
Can you just go over really quick, I'm sorry, the difference between an amendment and an addendum?
Okay, so Jennifer just asked the difference between the amendment and an addendum. Now, like I was earlier on in the class, I mentioned how most people in Virginia, they stopped making the differential documents because people didn't really get it. But in truth, what it means is on my shirt is like, I don't have the pocket here, okay? And I have a tear in my shirt. So I'm going to mend my shirt. So it's something that already exists, I'm just gonna fix it. But now I want a pocket, so I'm gonna add my pocket. I'm making an addendum to my shirt, so I'm adding my pocket. So that's the basic, so it really is in the first few letters of the word itself, to amend or to add, addend or amend. So amendment or an addendum. So addendum is really, we're adding something to something that already exists. So a contract's been ratified, and then something has happened throughout the time frame that makes us to add to or change, okay? And really, it's an addendum once it's ratified because we're not really amending something that's already done. So that's really legally, in legalese terms, it makes more sense that we're just doing addendum, okay? An amendment usually happens during the negotiation process where we're amending something that may have come over from the other side, and we're going to counter back with an amendment. So we're fixing something that came over, or we want to change the way they presented it. So that's the basic difference. But I always think about my shirt, to add, to mend my button, or to add my pocket, okay? All right. So this addendum is made on, so whatever day you're making it between the parties, I'm sorry, it made on, and it says to the sales contract offered on. So this is not the ratification date. So when you're doing extra documentations outside of the original sales contract, sometimes the verbiage following this here, sometimes it'll say to the contract offered on, and sometimes it says ratified on. So this date is the date that's on the front of your offer, regardless of what date it was ratified, okay? And then between the buyer, because their name's there first, so however many buyers you may have, however many sellers you may have, then you identify what the property is. And then down below, what do you need to state, okay? So this amendment could be simply that, or this addendum rather, could be that there was a home inspection and the seller does not want to do the work, so they want to credit the buyer, say $2,000, and the lender agrees. So it could be a simple addendum that simply says the buyer and seller, or the seller agrees to credit the buyer $2,000 at settlement. Just simple language. The seller agrees to credit the buyer $2,000 at settlement. Now, you don't say what it's for, because this is what the lender sees, because this affects the buyer's financing. On the home inspection addendum, which the lender does not see, is all the negotiations where and when we get to that in a few minutes, you'll see, but that's where the negotiations may take place, that the buyers ask for X amount of things to be done. The seller says, I'm not going to fix them, but I'll give you a credit in lieu of. Before you ever have your client sign to agree to that, you make sure the lender allows that credit, okay?
Can I ask a question?
Sure.
So if you were to change the price of the sale of the home, would that be an amendment? Or a lot of times they just change it on the contract.
Right. Now, once it's been ratified, it really should go on a separate form.
Mm-hmm.
So, yeah. So an amendment, but you're going to find the blank addendum. They don't even have the blank amendment anymore.
Mm-hmm.
So I would just use this same document. But in that case, that's really a true amendment.
Okay.
But Virginia used to have a document that said amendment/addendum,
Mm-hmm.
and it confused everybody. They didn't know which they were doing, so they just simplified it to addendum.
Mm-hmm.
And once it's ratified, the question was if the sales price gets changed along the way after ratification, right?
Uh-huh.
If you're changing after ratification, you really shouldn't go back to the ratified document and change it. You legally can, and everyone initials it, but it makes it a mess. By putting it on a separate document, it's clean. And in Virginia, everything stacks by date, okay? And that's why you put the date up there. So it says on this date, what are we, August 11th? So on the date of August 11th, this supersedes whatever's down below. So this is regarding a sales price change, regarding a credit. Maybe on the original contract, there is no seller subsidy, but now we have a document that says the seller is giving $2,000, which is a seller subsidy in essence. It's a credit. That's what a subsidy is. So therefore, that's why And so if someone's laying out all the paperwork, it's in date order. What happens from the beginning of the offer till the end of the offer, and all the changes, one can override the other. Okay. Okay, appraisal contingency notice. So, so this notice is given on, so the date that you're given the notice, and remember this is a one-way communication, in accordance with the sales contract ratified on. So here's the difference from the first one. This one's asking you for the ratification date, and you got between your parties, and then the name of the property. Now here's some of the, some of the stuff has changed recently, so you need to be aware of how this is read, especially if you've been doing real estate already. So the contract referenced above is contingent on the appraisal pursuant to the conventional financing and the appraisal contingency addendum, FHA financing contingency addendum, VA financing contingency addendum, USDA financing contingency addendum, and the appraisal contingency. The appraisal contingency is for the no financing. If someone's paying cash, they can still have an appraisal done and have a contingent upon the appraisal. And but there is no lender, but there's an appraisal done, and then they have the right to back out even when they're paying cash if it doesn't come in at the sales price that they're offering. So buyer hereby provides notice to the seller as follows. Choose only one option below. One option. See the word or? Okay, that you don't check them all. When you guys see or, and they forgot to highlight it there, look at that.
This is brand new, isn't it?
Yes.
Okay.
Yes. So this says, so the first one says the appraisal is equal to or greater than the sales price. This appraisal contingency is satisfied and removed. The parties shall proceed to settlement at the sales price. Check. So if it all comes in well and your buyer still wants to continue, you check that, the buyer signs, and you send it over. It's a unilateral communication, one-way notice. Or buyer elects to proceed with consummation of this agreement without regard to appraisal. This appraisal contingency is removed. The buyer shall proceed to settlement at the sales price. So this can mean simply that it came in a little bit higher, but the buyer has the means and the lender allows it to close, and they can simply say that. So it did not come in at appraised value, but the buyer elects to continue on. Okay, so that's a newer paragraph. Okay, the appraisal is equal to or greater than the sales price. However, buyer elects not to proceed with the consummation of this contract because the property either does not satisfy the lender's requirements, the appraisal does not allow for the specified financing, or the property is inadequate collateral, meaning the loan to value ratio, the lender doesn't accept it basically. Please see attached written denial of the financing showing evidence of the lender's decision concerning the property. Buyer declares the contract void. Okay, so when you're using this one here, the third option, you got to remember that the lender has to provide a rejection letter detailing exactly what the specified financing says. Okay, so if the specified financing says conventional loan, 30-year fixed for so much, whatever the interest rate is, and a sales price of such and such, and the appraisal does not meet that, then they can void the contract. So make sure your lender is working with you to produce the proper lender letter. They just can't say we're denying the loan. They have to give cause. It does not meet the specified financing, which is located on page 1, and that includes the down payment. So there's a 20% down payment even, okay? All right, so beware of that. And then you
That's
said,
number 3, it has to be 20%?
no. Any down payment, the down payment is part of the specified financing paragraph.
Right.
Okay. that meets the page 1 of your contract, and also the remainder of that is on your actual financing contingency, because on page 1 now we no longer stay with interest rate is. It's not part of the contract, it's part of the contingency of the financing. So in your financing contingencies that are listed above here is where you're going to find out 30-year fixed, or an
So they
arm.
never put the interest rate down
They do, but it's on the financing
on the financing
addendum, right?
Oh,
The interest rate's on the financing addendum, right? It's not on the page 1 of the contract, right? All right. So then the appraisal is less than the sales price, and buyer elects not to proceed with the consummation of this contract unless the seller elects to lower the sales price. And then please see the attached written statement setting forth the appraised value of the property. So this is what we're more commonly used to seeing, usually items 1, 2, and 4, basically, for the most part. But item 4 here is the appraisal is less, and the buyer does not want to proceed unless the seller is going to reduce the price to match the appraised price. And at that point is when you, as the buyer who has paid for and owned the appraisal, then is required to turn it over to the seller to prove to the seller what the price came in at. Okay. Otherwise, the seller is not entitled to the appraisal. Okay. If you're going to, if you're voiding on appraisal. Okay. Because up here it says the appraisal is equal to or greater, but for some reason the financing is not allowing them to proceed. Okay. So if more than one box is checked above, the notice is void and no force in effect. So, okay, guys, so pay attention to what you're doing. And as listing agents, pay attention when the buyer's agent sends you something that's not correct. Okay. So then we've got the appraisal contingency for no financing contingency. So that means there's no financing, it's cash. It used to say cash only, but I guess there's other ways people can get money. They're not doing a finance contingency. So it doesn't say cash only anymore. So someone could be getting a loan, but they're not going to be contingent upon the loan. It's really just going to be contingent upon the appraisal, because maybe their loan issue, their package it's not an issue. Okay. So this contract is contingent upon a professional appraisal of the property to be conducted by a Virginia licensed appraiser. Buyer shall have until 9 p.m. on such and such day following the ratification date to obtain the appraisal deadline. This is all negotiable. Common standard time is 21 days. It can be less or more. If you're putting less than the 21 days, you need to talk to the lender ahead of time, and you need to make sure that that lender is on board with their appraisal companies and that their appraiser can get out there in that time frame. Because remember, we're in a very busy market. Home inspectors are busy, appraisers are busy, so you don't want to hurt yourself by putting too short of appraisal time. Okay. Buyer shall deliver notice to seller with the appraisal deadline as follows. Appraisal contingency notice. The appraisal is equal to greater than, we just went over that. The buyer elects to proceed with the consummation of without regard to the appraisal, we just went over that. C, the appraisal is less than the sales price and buyer elects not to proceed with the consummation of this contract unless the seller elects to lower the sales price. So this financing, the appraisal contingency, is really reiterating what the notice says to make it very clear to the seller what the buyer's rights are, because there's no financing contingency to back them up. So just like in all the other contingencies, they have a negotiation period and they have a period to elect. So in this case, when they go to the notice and the buyer chooses one of these A, B, C, or D, then they have and if they choose C here on this one, where the appraisal is less and they can negotiate, it's setting forth here what their negotiation period is. Because on the notice, it no longer has that. There's no negotiation period. So, but it is on a financing contingency. So that's the difference. So if buyer has not delivered an appraisal contingency notice by the deadline date, this appraisal contingency will continue up to and including the settlement date. So let's say you have a 21-day appraisal contingency expiration. And on the 21st day, let's say it's tonight at midnight, and I do not send a notice to the listing agent that my client is removing this appraisal contingency. This first sentence is saying it will continue as a contingency until settlement date. Okay, but it says, however, upon the expiration of the appraisal deadline, seller may, at the seller's option, deliver a notice to the buyer that the buyer has 3 days to void the contract. If the buyer does not void the contract within 3 days following the delivery of seller's notice, this appraisal contingency is removed and the contract will remain in full force and effect. So it's kind of a waiting game sometimes between agents. Sometimes someone just simply forgets that the deadline happened. And in a hot market, you know, if someone's not performing and they're going to try to get out of the deal, a listing agent would prefer they void now instead of later so they can get it back on the market. So this could be a situation where the seller, if the buyer does not remove the contingency, the seller right immediately tomorrow morning, their agent sends a notice to void. And if the buyer doesn't void within the 3 days, then the contract remains in place and the buyer no longer has that appraisal contingency and they have to move forward. But then if the buyer does void, then the seller can put the property back on the market right away. So buyer's acknowledgement of potential adverse consequences. This form is not part of the sales contract and is not for discussion, disclosure, and is for discussion and disclosure purposes only, okay? It is not part of the sales contract. So this acknowledgement of potential adverse consequences is signed concurrent with an offer submitted by the buyer on a such and such property. Buyer is represented by an agent and the broker, okay? So you as an agent representing a broker are working with a client to submit an offer on a certain property, okay? So that's the stage we're set at. In submitting an offer, certain contract provisions may be waived or not utilized, some of which are referenced below. Buyer's decision regarding these and other contract terms may lead to potential adverse consequences. Broker can counsel on real estate matters, but buyer is advised to seek legal counsel and or other appropriate professionals advice regarding such potentially adverse consequences. Despite the risk of the potentially adverse consequences, buyer elects to submit an offer and ultimately ratify a purchase agreement for the property without the following. So if you have a client who says, look, I don't, you know, we're in a hot market, I don't want to do a financial contingency, or I'm not going to do a home inspection, I'm not going to do a radon. This is when you want to use this document with them. You want them to acknowledge that you've discussed with them that there could be adverse effects by not doing a contingency, by not doing an appraisal, by not doing a home inspection. This is the CYA for agents. That the buyer cannot come back and say, well, my agent never told me that I may not be able to get a loan because something's wrong with the house, or the appraisal came in 20 grand less and I can't make up the difference, and I let go of my appraisal contingency. Well, too bad. Okay, they then become in default. That's the negative consequence. That's the adverse consequences. So you would check off what they don't want to normally use, and then they would sign it. It doesn't go with the offer. It's part of your buyer's documents, your buyer brokerage agreements, okay? contingencies and clauses addendum. So this document, I think it's 4 pages long. It might be 5 now, 4 pages. So there's 2 things here. It's contingencies and then it's clauses. So there's 2 separate things, okay? So it starts off with your contingencies. Again, when is it made on? Generally speaking, this is made on the day of the offer. And so to a sales contract offered on. So generally speaking, they're on the same date, but it could be used where a seller may have to do a contingency to find their home of choice. So it might be the next day afterwards. But when it's a buyer doing it, generally it's the same day as the offer date, but it doesn't always have to be. Okay. So one of the contingencies is the sell a buyer's property and kick out. So the buyer wants to buy a property. So buyer A wants to buy property A. Okay. But buyer A has property X to sell. Okay. So they cannot buy property A until they sell their property X. Okay. And that's the situation you're in. So
That's A. No, that's just a situation.
it just happens to be the situation's A.
Happens to be.
Yeah. So the sell of the buyer's property and kick out. This contract is contingent until 9 p.m. Now, the more days you put in here benefits the buyer. The less the days you put in here benefits the seller, okay, of the contract we're working on. So try to put 14 days, try to put 20 days, and it depends on the market what the seller is going to counter back on, okay? But they're saying that we're contingent so many days after the ratification date upon the sale of the buyer's property located at, okay? So what property does the buyer live in? That's what goes in that address, not the one they're trying to buy, but the one they currently own. Okay, the buyer's property. If the buyer, so this contract is contingent until 9 p.m. blank days after ratification upon the sale of the buyer's property located at. Okay, so if the property does not satisfy, amend, if the buyer rather does not satisfy, amend, or remove the contingency by the deadline pursuant to subparagraph 3 below, the contract will become void. Okay, so you stop reading there. Okay, then you go to subparagraph 3. Okay. So these are choices, but right here, the first opening paragraph tells you, go down to subparagraph 3. Okay, so here it says, buyer may satisfy this contingency. The contingency is that if they can't sell their current home, they can void on the contract. That's the basic contingency. So to satisfy this contingency by delivering to the seller a copy of a ratified contract for the sale of the buyer's property with evidence that all the contingencies other than financing and appraisal have been removed or waived by the deadline. So let's say the deadline is 14 days from today, 25th of August. So the purchaser makes an offer, puts it on the property, and then they put their house on the market. And so the seller for their house has come, the buyer for their house has come in, and they have done their home inspection, and the HOA or condo docs have been delivered, the radon's been done, and all that's clear. The only contingencies that are left remaining are financing and appraisal. So that's what it means by all other contingencies. Any other contingency that might be part of their contract have been satisfied and cleared except for finance and appraisal. Okay. So at that point, the buyer may then release this contingency. Okay. Then it says or, remember it's not an and proposition, it's or remove this contingency by delivering to the seller a letter from the lender stating that the financing is not contingent in any manner upon the sale and or settlement of any real estate or obtaining a lease of any real estate and that the buyer has sufficient funds available for the down payment and closing costs necessary to complete the settlement. Or evidence of sufficient funds available to complete the settlement without obtaining financing. So I had a call the other day from an agent who was working with a client who owns their current home free and clear, okay? Their lender has already told them that they can purchase at X amount of dollars without having to sell their current home or even have a lease on it. That their income is sufficient enough, but they're in a hot market and they don't want to lose all their cash. And though the agent who's working with them has tried to share with them that by going into a busy market in Loudoun County with an offer that has a contingency for home of sale on it could potentially put them in a bad position when it comes to competing offers. That a listing agent presenting to their seller would say, okay, conventional, all cash. Oh, this one has really good credit, paying $25,000 over, but there's a contingency to sell their property. That could disadvantage that person, okay? So that's where a lender could come back and use paragraph B and say, okay, go ahead and remove that. Here's a letter stating that you don't need to sell your property. Go ahead and remove that contingency, okay? And then you've got the or up here again, or now it's back down to 4. So now we go back up to 2. So we want to start back over here. So if buyer does not satisfy, amend, or remove this contingency by the deadline, pursuant to subparagraph 3 below, this contract will become void. So if the buyer does not satisfy, so let's say the deadline is the 25th of August. So by the 25th of August, if my buyer has not cleared and satisfied this contingency, removed it from the book, so to speak, then the contract will become void, okay? Based on subparagraph 3, and it's given them the options in subparagraph 3 how to go about clearing that contingency. Now, paragraph 1 states that seller may continue to offer for sale and accept a bona fide backup offers to this contract until this contingency is satisfied or removed. If a backup offer is accepted, seller will deliver notice to the buyer requiring this contingency be removed or satisfied pursuant to subparagraph 3 below, not later than so many days following the delivery of the notice of this contract will become void. If buyer fails to satisfy or remove the contingency by the deadline, this contract will become void. So when you're looking in MLS and you see you have active status and you have active under contract, that is what those who were around before would think of the kickout clause. That means that the property can still be shown, that the seller is willing to take a backup offer. There's contingencies out there that have not been satisfied yet, that the seller is willing to look at other offers, okay? And we'll get down below a little bit further what a bona fide backup offer means. But in essence, it's a full offer and the EMD has to be deposited. That's truly what it means. So on the 25th, I've got a backup offer and I go to my buyer and say, look, I've got a backup offer. You have 2 days or 3 days or whatever it is to void your contingency or you're kicked out. Our contract's voided. That's where the word kick out comes from. You're kicked out of the deal and I'm going to proceed with the next deal, okay? Because it's ready, willing, and able to purchase and I want to move forward with them, okay? Number 2, buyer's property will be listed exclusively and actively marketed by a licensed real estate broker and entered into the multiple listing service within X amount of days after the ratification at the sales price not to exceed. Okay, So if you're in the middle of writing an offer and your client's property is not already on the market, then you put the date in there they expect it to be on the market and for what sales price. Okay. Now, paragraph 4. If buyer satisfies the requirements of subparagraph 3 above, 3A, subparagraph 3A, so we go back to 3A, and 3A says that the buyer satisfies this contingency by delivering to the seller a copy of a ratified contract for sale of the buyer's property, their home they live in, with evidence that all contingencies other than financing and appraisal have been removed or waived by the deadline, okay? So now, if buyer satisfies the requirements of the subparagraph 3 above, this contract will remain contingent upon the settlement of the sale of the buyer's property. This paragraph will survive the satisfaction of contingency for the sale of the buyer's property. Settlement under this contract may not be delayed more than, this is negotiable because it's a blank. So the more days you put in there, better for the buyer, less days, better for the seller. Split the difference when you're first making an offer, put like 3 to 5 days in there. So that just covers any glitches that could happen with the lender, okay? Days after the settlement date that's specified in this contract. Without the party's written consent, seller will or will not accept assignment of funds. Remember, assignment of funds is generally meaning when the buyer sells their property, they're getting funds from the purchase of their property that's going into their bank account. But if money goes into someone's bank account, it could take several days to cure at a bank before the bank will then send it on to another entity. So instead of it going into the buyer's bank and out of the buyer's bank, one title company, or it could be the same title company they're working with, is assigning, like on a piece of paper, Debbie is going to give $100,000 from her left hand to her right hand, basically. And so that's the assignment of funds. A seller has to accept the assignment of funds. Now, when it's local and it's often the same title company, usually there's no objection. Now, if it's coming from overseas or from a different state, sometimes the seller will object to the assignment of funds and they want the money to, they'll want settlement extended out so there's no assignment of funds. Years ago, that was more of an issue because it could take a week for funds to get transferred through the wiring funds. Now it's not like that, but it could be. So the language is still there to allow the seller to accept or not accept, okay? If a further delay is required to obtain coinciding settlements, buyer may, at the buyer's option, declare the contract void in writing. Okay? Nothing herein shall prohibit the parties from mutually agreeing to extend settlement under terms acceptable by both parties. So if there is a delay on either end and everyone agrees, you just extend settlement using an addendum. Buyer and seller, you don't have to say hereby. Buyer and seller extend settlement till, and you put a hard date in there. And you can also often say buyer and seller extend settlement on or before, September 5th, for example. Always look at a calendar, always make sure that that's not a weekend, okay? And in this case, I think September 5th is a weekend. But so buyer will immediately deliver notice to the seller together with evidence of such voiding, at which time seller or buyer may declare this contract void by delivering notice to the other party, okay? Now you have B. So A and B are separate paragraphs. They're separate contingencies, okay? Oftentimes agents will choose one and then they also choose B. It's not necessary because paragraph 4 covers the buyer all the way up through the date of settlement, okay? Keep that in mind. Okay, settlement of buyer's property. Settlement of this contract is contingent upon the settlement of this contract for the sale of the property located at. Okay. it's under this contract may be delayed no more, this contract may be delayed no more than blank days after settlement. So what this is stating here is that there's already contract on the buyer's property. So the buyer has already got their property listed. The first one is they're going to list. So this one means they've already got their property listed. They already have a contract on their property. They're just waiting for it to settle, okay? So the settlement of this contract is contingent upon the settlement of the contract for sale of the buyer's property located at the property they want to sell. Under this contract, the one we're working on to purchase, may not be delayed more than blank days after settlement of the contract that they're selling, okay? So again, more days for the buyer, less days for the seller. 3 to 5 days should be adequate, but it's all negotiable, okay? And when you're if you're in a seller's market, having your buyer put their property on the market and get it under contract before they get a property is truly the best thing to do, because they themselves are probably in a seller's market, so it's more assured that it's going to close. And sometimes it's hard to take that fear out of someone's, like the couple I was telling you about. Their fear is that their house would sell and they couldn't get a contract on another one, they'd be homeless. Well, that's where you have the option to extend settlement dates to talk about terms. But like I advise that agent, I said, go over this with them. Talk to them about getting their house on the market or under lease if they want to, they want to lease it out and keep the property for an investment. But talk to them about satisfying paragraph B here before they make an offer, because they've lost several offers and it's because of paragraph A.
So the difference between A and B is that A covers anything that would affect them selling their property to buy another property?
So A basically is that the property they currently live in is not yet on the market.
Oh, okay.
Okay. So, because it says they're going to put it on the market here.
Oh,
Okay. Now, some agents will go ahead and use this paragraph because they just maybe put it on the market last night, for example. So they might say it was on the market in 0 days, or it went on the market. They might put a date in there for this list price. They'll still want to use, they still use this paragraph because they're not yet under contract.
that's really risky. It's not even on the market. Just fill that out.
No, if they put it on the market. So let's say they're making an offer today, and
Okay,
last
so-
night they put their current home on the market.
Oh, okay. So then
So they might choose this one because they do not have a contract.
Oh, okay.
on their-
Just because they don't have a contract.
Correct. This one is as if you do not yet have a contract.
It's contingent upon the sale.
It's contingent upon the sale. Paragraph B is also contingent upon the sale, was contingent upon the settlement of the property.
Oh, they do have a contract.
Yeah,
That's
so,
different.
right. So paragraph B means that the buyer who wants to purchase property A, they're selling property X, they already have a contract on it. And, but they still want to be contingent that their property actually settles,
Right.
okay? So then, so again, nothing stops a buyer and a seller from agreeing to extend settlement for things to get wrapped up, okay? Sometimes it can be a simple thing as a hurricane, okay? So if a hurricane's coming, like last week, and you were supposed to close on Tuesday, and the settlement office says we're going to be closed, it doesn't hurt you as agents to do a quick amendment to say you're going to close on or before like Friday, which means if everything's open back up on Wednesday, we can close on Wednesday,
I just closed on a hurricane the other day. The guy's like, I'm coming down there, you better be open.
Yeah, but see, it also depends if the lender can get their money out. That's the
Yeah.
thing. That's not necessarily where you're setting. If the title company can show up,
Right.
can the lender get the funds there?
Mhm.
Because when a hurricane comes through, it can shut down, electricities and stuff like that. Could be, broad stroke And it depends on where it's at, how it affects us. So always, when there's a delay of any sort between the parties, even as an act of God or a third party challenge, do an amendment, and it's okay, or an addendum to, if you're going to close on Tuesday, okay, and you think you can close on Wednesday, but you're not sure, you can always say on or before the Friday's date, because it's saying on or before. You've already agreed. So then verbally, everyone says, okay, looks like we can close on Wednesday. Let's all show up, etc. Okay. Paragraph C is contingent on the seller purchasing another home. So now you've got a seller selling their home, and they need to go out and buy a home. So they want to be protected. They don't want to be homeless either. So then it's that this contract is contingent until 9 p.m. blank days after ratification. Now here it's more advantageous. The more days are more advantageous for the seller, less days for the buyer. It's the opposite. Again, negotiable. Okay. To allow the seller to ratify a contract for purchase of another home and conduct whatever due diligence seller deems necessary under the terms of the seller's contract to purchase another home. This contingency will terminate at the deadline of this contract at a deadline, and the contract will remain in full force and effect unless the seller delivers a notice to the buyer prior to the deadline that the contract is void. So if the seller puts down a 14-day contingency and they go ahead and get their new property and they're under contract, they don't owe the buyer any documents. Whereas in the buyer's situation, they have to provide documentation to the seller to prove that they have an offer coming in. This case, the seller doesn't have to prove anything. When the contingency expires after the 14th day, the contract just remains in full force and effect until it closes, unless before the end of that 14-day period, the seller sends a notice to void. So as a listing agent, as a buyer's agent in this situation, and you're on day 16 of a 14-day post-ratification, don't bug the other agent to send over the clearance. It's voided. It simply states it's done, it's over with. Because they've passed by their 14th day post-ratification, their contingency no longer stands. Okay, so you don't have to have some little piece of paper. There's no requirement that you have to show a piece of paper saying that the seller voided their contingency. It automatically voids at 9 p.m. Okay. Now, Virginia, I think Andy from this office may have brought that up, or it could be Andy from Falls Church. I know it was Andy. You know, in Virginia, we say 9 p.m. and some in DC it's 6 p.m. or whatever. If you're someone who doesn't want to work till 9 p.m. at night, you can certainly, or your client might be someone who says, look, I work, you know, I have to go to bed at 7 and I get up at 3 in the morning to go to work at 4, then you might want to change the time period. And just as long as everybody agrees to it on both sides, there's nothing wrong with that. So now paragraph D is a general contingency. It could be something like a feasibility study. Maybe you're going to buy a property or an architectural study. You want to purchase this property, and you want an architect or someone to come out and give you to walk the property with you, give you architectural designs. Will it work with what you want in a home? Will it work on the property you're going to buy? So you need a time period for that contingency. You need a time period to allow inspectors or other people other than home inspectors to come out and study the property. Or you have permission from the state to convert a property, for example, commercial to residential or vice versa. So there's a feasibility study on how that gets done. Or you have a property that, and these are examples that I've been involved in, or you have a property where you want to create a circular driveway as opposed to what the driveway is there, and VDOT has to approve it. So you might want a feasibility study while you're getting VDOT out there to approve it. And if VDOT doesn't approve it, then you don't want to buy the property type thing, you know? So it can be a hodgepodge of stuff, but you want to be very succinct in what it is. And if you're not sure about the language, talk to your broker to make sure there's nothing ambiguous. So those first 2 pages were contingencies. That means there's a time period for something to get done. And then if it gets satisfied, the contingency is removed, or it extends beyond that and the contingency just drops off as if no one noticed it and the contract continues on. Now the clauses, so the backup offer. So this is going back up what we talked about in the first paragraph, that the seller is saying, okay, Mr. Buyer, I will take your offer, and but I want a backup contingency on here. So this contract is first backup to another offer. So I'm sorry, I'm saying this backwards. You are presenting an offer to, someone is sitting using the first paragraph, okay, of the clauses, or the second one where there is a contract in place on a property. You are an agent who represents someone who wants to write on that property, and that's when you use this clause. So you're going to say that I'm going to make an offer to you, Mr. Seller, even though you already have a contract on your property, and it's the first backup offer to another offer that's dated on between the seller and the buyer. So the seller tells you who the buyer is. So it could be John and Jane Jonas and William and Mary Smythe, okay? So this contract becomes the primary contract immediately upon the notice from the seller that the contract is void. So the contract they're currently in is void. The moment that contract is voided, so let's say it's voided at 3 o'clock today, then the contract that you've submitted already is being held in ready. So the moment that the other contract gets voided at 3 p.m., you then become the primary contract, full force and effect with everything moving forward.
That's only if the first contract doesn't go through.
If it's voided, right?
If that one's voided.
Right.
But this contract is not void going in.
No,
Right?
no. What this is saying is that this contract becomes the primary. So this is buyer 2.
Okay.
Coming along to buy 1234 Main Street. So 1234 Main Street has a contract on it, okay? Now, it may not even have a buyer contingency clause. It could just have a simple contract.
Yeah.
And my client, which just happened to me this week, my client said they wanted me to do a backup offer for them on such and such property, okay? They were gung-ho. I said, well, you have to deposit your earnest money.
And the seller has to agree, right?
Right, the seller has to agree to it, okay? And there was and almost all the contingency was released on the other property except for financing and appraisal, okay? So if I'm making an offer on a property on behalf of my client, and there's a property that already has an offer on it, the first thing you do is you call the listing agent. Are you accepting backup offers, okay? I don't fully rely on what MLS says because, like I said, you have the word active, then active under contract. Active under contract is supposed to signify that backup offers are being accepted, that you can still continue to show property. But a lot of the agents use that incorrectly. When you're not accepting backup offers, then you go under pending. Okay.
Oh, really?
Yeah.
I didn't know that.
Yeah.
That's why I get all this calls.
Yeah. So it should be pending. It's pending. You've got contingencies to expire. And that's the new language because our MLS became part of a larger MLS from different states, and we all use different language. And so we've had to adapt to their language. So anyway, so back to the backup offer. I'm representing buyer B. They want to make an offer on a property that buyer A has an offer on. So I'm going to say to the seller that I want to be the first backup offer to another contract, which you already have between yourself and the buyer. Okay. And then Once the seller voids the other offer for whatever reason, it could be the buyer who voids it too, my buyer B becomes the primary contract with the seller, and then all their contingencies bounce off of that date. So if it's at 3 o'clock today, then that's the date of ratification. So all deadlines contained in this contract shall measure from the date of ratification or the date of the contract becomes primary. I always choose the second one because I don't want my buyer to pay for home inspections. Because let's say we ratified 4 weeks ago, waiting for this other deal to fall through or never close, okay? If I say date of ratification and my home inspection is 7 days, that means a month ago, my buyer has to pay for their home inspection. By doing date, the contract becomes primary, then that means from today is our primary. The day we become primary is today, because at 3 o'clock, the seller voided and gave us notice. Then my 7-day contingency starts from today, okay?
So you would fill out B instead, or no? Still fill out A?
I fill out the second part here after the or, the date the contract becomes primary.
Oh, okay.
Then additionally, settlement date will be blank days after this contract.
Ratification.
Right. So then if my settlement date is built in to be 30 days, it's 30 days after I become the primary. So there's no
So how many days should you have it normally?
Well, you should have at least 30 days unless your lender,
Okay, 30
you know,
days, right.
unless your lender says they can close it less than that.
Right.
That's
Unless
kind of
it's cash, right?
Unless it's cash.
Okay.
A cash offer usually 3 days. That gives everybody time to do their work. Okay. Now, the buyer may void this backup contract at any time by delivering a notice to the seller prior to delivery of the notice from the seller that this contract has become the primary contract. So during all this waiting time, the maiden waiting in the wings, if the buyer decides, look, it looks like the other deal is going to go through, I'm going to go ahead and look at other properties, all they have to do is send a notice to the seller to void. But once the seller has given them notice that they're in primary position, then they have to continue on or void the contract under their contingencies, okay? So if the other contract settles, this contract becomes automatically voided. The rights and obligations of the parties under this primary contract are superior to the rights and obligations of the parties to the backup offer. So in order to be a bona fide backup offer, you have to deposit the earnest money check the moment your offer is ratified. So that buyer's money is sitting in an escrow account somewhere, okay? And even if they void this contract to go buy another property, they still have to go through the full voidance. They have to go through the notice to void and the notice to release the deposit, because that money is attached to this contract. The seller just signs it and the money gets released back to the buyer, okay? As is contingency. So if someone's selling a property as is, okay, and you represent the seller, then you need to make sure that you're telling the buyer's agents that they need to complete paragraph B under the clauses on this document and do all the check marks, okay? But if the property is sitting vacant, then they may not need to check number one. You know, you can direct them what to do. If I'm representing a buyer and it says as is, okay, and I don't give the seller an as is clause here, and the seller just refusing to do the home inspection items, and we go to close, and this document has never been completed and filled out, that means all the other terms and conditions really apply. So as a listing agent, if you're representing your client as is, you need to go over this document with them and says, an as is property, this is what it means. Are you saying to everyone out there in the world that they're giving up their rights for all of this? Okay. Or maybe some of this. So if you're representing a seller and your seller truly doesn't want to deal with any of this, including, making sure they're in compliance with the condo and all that, that means the buyer has to be aware that they have to deal with all this themselves and pay for it. Okay. So just be careful, no matter which side of the coin you're representing, when it comes to as is, you all know what your rights are based on whether you use this clause or not, or portions of it, okay? Unrepresented seller or builder and buyer's broker. Upon the seller's irrevocable instruction, it is understood and agreed that by all parties that Keller Williams Realty so the broker's name, Steve Gaskins of Keller Williams Realty Falls Church, is acting as an agent solely representing the buyer in this transaction. The seller agrees to pay the buyer broker a payment of, in cash or a percentage of, the total sales price. The settlement agent is hereby irrevocably directed to deduct buyer broker's fees from the seller's proceeds of the sale at settlement. The parties acknowledge that the buyer broker relationship was disclosed to the seller and or seller's agent prior to showing property to the buyer. This can be used for a FSBO, new construction. Most new construction places have their own documents they filled out, but this could be a private builder. So this is how you're guaranteeing your commission, that the seller is not represented by an agent. And so they're going to agree. They understand that Keller Williams and Steve Gaskins represents William and Mary Smythe, and they're going to give you 2% of the sales price, and it's going to be paid out of their proceeds at settlement, okay? But you as the buyer broker need to show the seller that you actually have an agreement with them, okay? So make sure that you do, okay?
Oh, this is what I'm dealing with, the 1031.
1031 exchange. Well,
That's
I will.
new, right?
Well, no, it's been around. It's been on here for years. So I'm not going to talk in great deal what 1031 exchange is. I'll read what you're obligated to do in the offer here. But in succinctly, 1031 exchange is an IRS code. 1031 is an IRS code. Okay. So when someone's involved in a 1031 exchange, both sides need to give notice. So a 1031 exchange for the buyer means the property is being acquired to complete an IRC section 1031, IRS code 1031, tax-deferred exchange pursuant to an exchange agreement. This settlement will be coordinated with. So you have to have a 1031 exchange company, an intermediary, to administer the 1031 exchange and follow the rules, okay? So the buyer has to identify who their 1031 exchange company is. Who shall instruct the seller as to the manner property shall be conveyed to the buyer. There shall be no additional expense to the seller as a result of the exchange, and seller shall cooperate with the buyer and intermediary in the completion of this exchange. So let's say I'm a seller and I have a.
Can I give you a property?
Sure.
Okay, zoned A2.
Okay.
And I've got a guy who needs to do a 1031 exchange. Now there's special tax exemptions for buying A2 property. Would he benefit from buying the A2 property, or would it?
I can't answer that question. That's a CPA question. But basically what happens is someone who wants to, a buyer is going to use, so let's say I sold a commercial property in DC for $3 million.
Right.
Okay. And I don't want to pay capital gains on that because it's $3 million free and clear. Okay.
Right.
And
capital gains is what, up to?
well, again, that's it's an IRS thing. It depends on how much someone makes. So I want to.
I know.
So I want to defer my taxes. Okay. So the IRS says I have X amount of days to locate properties to buy, and it can be more than one property. It could be
Sure.
it could be 15 properties.
Sure.
I have so many days to identify properties that I want to buy, and then I have so many days to close those properties.
Yeah,
Okay. So an agent working for someone with a 1031 exchange, you're working in conjunction with the intermediary. And so you have, let's say you have 45 days to identify the properties
mhm,
that equal the $3 million, for example.
mhm,
And then after that time period, you have so many days, and it used to be 180, I don't know what it is right now, days to actually close on the properties.
mhm.
Okay,
Abby, it's still 180. I did one within the last 2 years.
It's
great.
180
180 days to close.
to
Yes.
close.
So is it still 45 days to identify?
It's yes, or 90 days to identify, 180 days to close,
90
and
days.
and I did everything within 90 days.
Yeah. So so you have that time that your buyer goes out, they have all this money sitting there, and they only have from the day they close, so the day they ratify and their money comes to them
Uh-huh,
from the 3 million, then they have, so now it's 90 days to identify a bunch of properties.
uh-huh.
So what a lot of buyers will do is they'll go out and identify more properties than they actually need
Right,
because they may not win that deal.
right.
Right?
Well, they're trying to lowball us, that's why.
Depends,
Now I know,
you know.
now I know
you know,
why.
So I know one guy who, and that was the case, he sold a $3 million commercial property in
Uh-huh.
DC. I helped the agent because we wrote a ton of contracts. And he bought a lot of rental properties in the
Uh-huh.
Manassas, Centerville, Chantilly area
Yeah,
to lease out.
yeah,
And that's how he spent his money
yeah.
to do that. So, but again, you have to work with the intermediary. The seller doesn't pay any fees whatsoever, okay? Then
When
you
you're
have,
doing that, 1030, no, so no closing cost to the seller?
no, the seller doesn't pay any extra fees because of a 1031 exchange. It's the
So-
buyer who's dealing with, this is the buyer's 1031 exchange. So the buyer is declaring to the seller in paragraph D that they are a 1031 exchange.
So, but if they put in a contract and they go to settlement,
It's just normal.
it's normal.
Yeah, it's normal.
But
The
there's
seller's not paying any fees toward the 1031.
Okay.
Okay.
No, I-
Now, when it comes to a seller, paragraph E, the seller has to notify the buyer
uh-huh.
that they are a 1031 exchange seller. So now this is the 1031 exchange seller who sold the $3 million commercial property in DC had to notify the potential buyers of their property
Yeah,
that I'm selling this under a 1031 exchange.
yeah.
Okay. So then the seller and buyer agree to transfer the property by utilizing the IRC section 1031 exchange, tax deferred exchange. Buyer agrees to cooperate with the seller at no expense or liability to the buyer, which means you just need to sign any documentation on either one of these that the intermediary might send to you. And at closing is your acknowledging or whatever. And the completion of the exchange, including execution of all necessary documents, the intention of the parties being that the seller utilizes section 1031 to defer taxes by acquiring like-kind real estate through an exchange agreement established at settlement. The parties will execute all necessary documents as determined by the intermediary at the settlement. Such documents are prepared at the seller's expense, okay? Because the seller is the one going into the exchange. They're going to pay any expense due to the intermediary. The buyer just has to be notified of it. They don't agree to it. They're just being notified of it. They're agreeing to it by signing the document. So real estate cooperative, Virginia Real Estate Cooperative Act, seller has delivered or will deliver to the buyer the required public offering statement. If this statement was delivered prior to the date of ratification, then the buyer has 10 days from the ratification to void the contract by delivering notice to the seller. If the statement was delivered after the date of notification, the buyer will have 5 days from the receipt of the settlement date of the notification, whichever comes first, to void. So a cooperative is they're kind of like condos, but no one owns the land. The land is being leased, and there's a time period that the structure will stay there. And at that point, the lease goes back to the original owner, and the structure would come down. So you have no rights to claim any of that. So you have to be notified that it is a cooperative And when does it expire? When does the public offering of the land come back up? Okay. So except as otherwise modified by this agreement, all the terms and provisions of this contract are hereby expressly ratified and confirmed and will remain in full force and effect. Okay. COVID addendum, I'm not going to go over this. I put it in here, but Shannon and Steve have another COVID addendum they've done for us, and they said they would prefer us not using the one from NVAR. Okay, so if you get into a situation where you need a COVID addendum, reach out to us, and we'll find out what the situation is, and we'll get the appropriate addendum for you. Okay, conventional financing and appraisal contingency addendum. Okay, so what I want to do is I want to do the VA. Well, we'll do conventional, and then we'll look at VA since we're here. Okay, most of the contingencies are pretty much the same. The VA, you don't get to choose your date for the appraisal. It's just set that they're going to do an appraisal period. Okay, specified financing means the terms set forth in paragraphs 2A and 2B of the sales contracts. On the very front page of your offer, you have specified financing, which is how much your down payment is, how much you're financing, and is it a conventional FHA, VA, USDA, what have you. And then here it says, then there's a first trust. So in the first trust, are we obtaining it, which means you're getting a new one. You're not assuming someone else's loan. That's pretty rare these days. Is it fixed or adjustable? So you have to answer the or situation. So it's obtain or assume, fix or adjust. It's not one of the four options. It's one of this group and one of that group, okay? And most likely it's obtain, fixed. First deed of trust. First deed of trust means loan. That's just another term. When it gets recorded at the courthouse, it's the deed of trust, not your deed. And it means you're trusting, another company's trusting you with their money to purchase a home, okay? So the first deed of trust, the loan is amortized over, generally speaking, it's 30 years, but it may only be 15. So make sure you write in what it says because it should match the lender letter. And it's the lender who should be giving you this information. And if your client has a lender who's not, tell them to ask the lender for it or get a new lender. Okay, that's the lender's job, is to give this information to the client and to you. The interest rate for this loan is at an initial interest rate, not to exceed so much per year. Okay, so right now you might be at, the letter might say 2%, but the lender might also not to exceed like 4.5, for example, in case it goes up overnight. So they're kind of covered there. Okay, now if your client needs a second trust, then you fill out paragraph B. But if there is no second trust, you just skip past it, okay? Alternate financing. This financing contingency shall not apply to any alternative financing. Alternative financing means any change to the financing terms in the specified financing, including but not limited to a down payment amount, the amount financed, the loan type, conventional, FHA, VA, USD, or others, term of any loan, interest rate, or loan program, assumption, fixed, or adjustable. So this financing contingency shall not apply to any alternative financing. Means any change to financing terms in the specified financing. Okay, so if you're changing any of the terms, then this contingency becomes null and void. Okay, buyer may substitute alternative financing for specified financing. However, buyer shall obtain the seller's written consent and shall execute a new financing addendum if applicable. So if you have a conventional loan, you're going to switch to a VA. You can't just do that. You have to get seller's permission to do that. And you would want them to sign a VA financing contingency, to allow you to continue with the contingency. So should the buyer pursue alternative financing without seller's written consent, buyer shall waive the protection of the financing contingency. So you have a buyer and you're totally unaware of the fact that you've done an offer for them with conventional, and they've decided, someone said, oh, weren't you in the military? Why don't you go get a VA? So they talked to, and the lender they currently use doesn't know a whole lot about the VA. So they go to another lender and they start working on a VA loan. And then all of a sudden you're calling the first lender saying, hey, how's the appraisal going? They're like, oh, I'm not representing them. And you're like, what? Well, all of a sudden now your client has no financing addendum whatsoever because they violated the terms of the specified financing paragraph. So this is very important that now, let's say your client has a conventional loan, 20% down, 30-year fixed at no more than 4%, okay? And they find out that their credit union has a lower interest rate, okay? And they go to their credit union, a different lender, but all the terms are the same, then they're still covered because they're not changing the specified financing. They're just changing the lender. But everything else stays in. Now, if that does happen, it's a courtesy to have the new lender provide an updated lender letter for the other side, okay? Buyer substitution of a lender to which written application has been made under paragraph 2D of this contract shall not constitute a change on specified financing, is what I was just saying, or constitute a buyer default, provided there is no additional expense to the seller and the date of settlement is not delayed. So if your client does choose a different lender 6 days into a ratified contract, and that lender says, oh, but you put down 14 days appraisal contingency, we can't get it done in 14 days, then you're constituting a change, okay? Then you're going to need the seller approval for that, okay? Now here it says select 3 or 4. As a buyer, pay attention, buyer's agent. As a listing agent, pay attention, because 3 helps the buyer, 4 more sides with the lender, the seller. So this contract is contingent on the buyer delivering to the seller 21 days after the date of ratification deadline, a written conditional commitment for specified financing. Remember paragraph 1, what is my specified financing? B, see where the little crosshatch is here? Okay. B, if buyer has not delivered the written conditional commitment by the financing deadline, this contingency will continue up until including the day of settlement. However, upon the expiration of the financing deadline, seller may, at the seller's option, deliver a notice to the buyer that the buyer has 3 days to void the contract. If buyer does not void the contract within 3 days following delivery of seller's notice, this contingency is removed and the contract will remain in full force and effect without this contingency. C, buyer may void this contract by delivering to the seller prior to the satisfaction or removal of this contingency a written rejection from the lender to whom the buyer has applied for specified financing. Remember, the rejection letter needs to include the terms of the financing. Nothing herein shall prohibit the parties from mutually agreeing on terms acceptable to both parties. So paragraph D can cover you in paragraph B to say that your lender has said, hey, I'm not going to be able to give you a full commitment by the 21st day after ratification. You know, with COVID and the hurricanes, the office has been shut down for a week. We're going to need an extra 5 days. As long as the buyer and seller agree on that 5 days, you can certainly extend it, okay? It automatically extends unless the seller forces avoidance, okay? That's what it's called, financing contingency with automatic extension. So they initial there, that's the one your client's going to choose as a buyer's agent. Here it says finance contingency with automatic expiration. This contract is contingent on the buyer delivering to the seller 21 days after the ratification, a commitment letter. If the buyer does not deliver the written conditional commitment by financing deadline, this financing contingency will expire. Boom, it's over with. Okay, because it automatically expires. Unlike paragraph B, it automatically extends. Buyer may void this, same thing with the other paragraph, long as you have a lender letter with the specified financing for rejection. Again, parties can mutually agree, even though someone may choose paragraph 4 to automatically expire. And on day 20, you as the buyer, you as the buyer's agent, hear from the buyer that the lender needs 5 more days. Then there's nothing that precludes you as a buyer's agent to reach out to the listing agent and say, hey, you know, we're supposed to expire tomorrow, but they need 5 more days because of COVID and because of the hurricanes or what have you, or just because, you know, it's a busy market, the appraisal didn't get in there till late, whatever it is, whatever the reason is, just share it with them and say, could we extend the contingency for X amount of days? As long as it's agreed upon, right? Okay. Appraisal contingency, this contract is or is not contingent upon appraisal. And it says right here up front, minimum of 21 days is recommended following the ratification to obtain an appraisal. Because remember, a buyer has 7 days. The buyer has 7 days to finalize their financing. And in that 7-day period, depending on how quickly in that 7-day period, if they don't do it till day 7, then that means they've already lost the first 7 days of the appraisal contingency. Okay. So that's why the minimum of 21 days. And if you're ever in a competitive offer situation, you make sure you ask that lender, can they perform an appraisal less than 21 days? Are they pretty sure with their, you know, with their wheelhouse of appraisers that they can get someone out there? And that might mean that someone's paying for a rush appraisal, okay? So if neither box is checked, this contract is contingent upon an appraisal pursuant to this paragraph, and the appraisal deadline is the financing deadline set forth above. So if someone forgets to fill that out, either one, then it becomes the same as the financing above, okay? Buyer shall deliver notice to the seller that the appraisal deadline as follows, okay? The appraisal, and then we've already gone over this, so I'm not going to iterate this again. We've already gone over all of this in the other. They're just reiterating here in the contingency what the appraisal contingency is going to say, okay? Lender required repairs. If, as a condition of the providing financing under the contract, the lender requires repairs to be made to the property, then buyer will give notice to the seller. So it's a notice, a one-way communication, unilateral. It's not an agreement. The buyer will give notice to the seller of the lender's required repairs. Within 5 days after such notice, seller will give notice to the buyer, again, one way back, as to whether the seller will make the repairs. If the seller will not make the repairs, the buyer will give a notice back to the seller within 5 days at the seller's notice, after the seller's notice as to whether the buyer will make the repairs. If neither buyer nor seller will make the repairs, then this contract will become void. This clause will not release seller from any responsibility set forth in the paragraph titled Utilities, Water, Sewage, Heating, Air Conditioning, Personal Property and Fixtures, Wood Destroying Insects. So if there's a wood destroyed insect issue, then the seller just can't void. They have to still fix those. Or in the private or well or septic system, addendum or any terms specifically set forth in this contract to any addenda. All right, it is 1:36. Let's take a break to 1:45, okay? I've been talking really long.
Is this until what, 2?
3.
3 o'clock, you're gonna kill yourself.
This is the last class. Pause. Pause.
Take a long enough break.
Yep, quarter.
I might skip out just a couple minutes early. But I think this is the stuff that I need to know. Attachment to the contract. Did you say you had an extra book or you don't?
Write your email address down for me and I'll send you this group.
Okay, great.
Everyone hear me? Am I take my mute off yet? I don't think so. No, I'm muted. Can everyone hear me? Can someone just unmute themselves and tell me you can hear me?
Yes.
Okay.
Yes, I can.
Oh, and remember to sign in under the chat line that you're here. Remember to do that. I always forget to do that. So. Okay. And I was just talking to Jennifer about this very document. Disclosure of brokerage relationship for unrepresented parties. So you're representing the seller. Generally speaking, that's where you're going to find this. But then again, you know, the one with the FSBO really is covered under the other document. But the undersigned unrepresented party do hereby agree and disclose that the licensee, so Deb Roof, associated with Keller Williams Realty Falls Church, represents the following party in the residential real estate transaction for the sale or lease of such and such property. And so, and I'm representing the seller, for example. Now, where you might run into this more often than not is in a rental situation, where you're going to represent the landlord and a tenant's going to show up and you're going to do the deal. You're not representing the tenant. You're unrepresented. You're representing the landlord, but you're going to give the tenant a copy of the blank application to fill out or direct them to the online application. You're going to write the lease and you're going to send it to them, but you're not advising the tenant. So that's more than likely you're going to use this document in the landlord-tenant relationship. But just like with Jennifer, a buyer is coming along that's unrepresented. So then therefore she represents the seller. She has to notify them that I represent the seller and that I'm not representing you in any way, shape, or form. Okay, okay. Okay, disclosure of designated agents or representatives. So Keller Williams United, woohoo, all three of us, right? So if we're showing property that belongs to someone in our group and our brokerage, then we need to make sure that we're doing designated representation. So one of us can be representing the seller or the buyer or a landlord situation. Okay, so the undersigned hereby acknowledge and disclose that Keller Williams Realty, or in our case, it'll be Keller Williams United, represents more than one party in the real estate transaction for the sale of the lease of the property. So let's say it's a purchase and not a lease, so we represent the buyer and the seller. And then down below, pretty self-explanatory here, one of us is representing the seller, the other one's representing the buyer. You specify, and we're standard agency. You could do independent contractor, either one. For us, it's the same.
Hey, Deb.
Yes.
I don't mean to interrupt, but all I see is the PDFs. I don't see what's on the screen behind you. Am I doing something wrong? Oh, there you go. Somebody else.
You
says
see me
we don't-
scrolling?
No, ma'am.
Okay. So what are you seeing? You're not seeing, you don't see the word here, disclosure of designated agency?
No. I'm seeing where you opened it from, like the boot camp master.
Okay,
Yeah.
great. All right, thank you. Thank you. Let me stop sharing and go back.
Ooh, that's a big picture of me behind you. Okay.
Okay, so let me try there and go back this way. I don't know, sometimes it's, like I told you guys, it's a mystery to me. I don't know where that came from, okay?
That's okay.
Okay. File. Save
Sometimes it's what you select for screen share. If
Yeah.
you're using Mac. I
That's
get
why I
it all the
told you guys
time.
I'm having issues with this Mac.
I have a Mac, screen.
Okay. And then the worst yet, my space bar stopped working. It's only 3 years old. And my shift key's not working, so I've got to figure out what I'm gonna do. Okay.
You might need to bring it into one of my stores.
I have thank you, but I do have a policy on it somewhere.
Awesome.
That's the DC one, I think, right? All right.
I see you now. I see it now.
Okay, great. All right.
Thank you.
Okay, all right. So anyway, so designated representation and stuff. So if you're going to show a property that the agent, because you're going to know when you open it up in MLS that it belongs to an agent, one of our offices, then you should have your client sign this form and send it over to the listing agent to do the same. Okay, so let them know up front that we have an affiliated relationship between us. Okay. Disclosure of dual agency or dual representation in a residential real estate transaction. Don't do it. Don't do it. Don't do it.
Say that again?
Dual agency.
Yeah, that's it.
They don't want us to do dual agency. However, like I've said, where you're going to find that you might do it would be in a landlord-tenant situation. You might have someone who's come to you to represent them as a tenant, and you might have properties that are on the market for lease, and you might put the two parties together. There's not a lot of negotiation going on there. So you can truly represent both parties in a lease. You're just having the tenant fill out the application, and if the landlord agrees to their application, then you write the lease, it's signed, and that's a done deal. If that's the case, then you need to declare, were both existing clients, or did one come along later? So let's say you represent a landlord and a tenant came along, someone referred a tenant to you and you signed an agreement with them, and then they were interested in a property you already had existing. Okay, so you just have to fill either one of those out. Okay. I don't want to spend a whole lot of time on that document. You don't use it that often. Okay, escalation. A lot of agents, they really hate the escalation clause. So more often than not, you're going to be asked to do your highest and best.
Oh, right.
Okay, so if you're in a competing offer situation, the listing agent calls you and says, look, thank you for your escalation clause, but it's just too confusing for us. My seller wants you to do a highest and best offer. Now you can say, well, what's your highest offer right now? And if they have a listing agreement that says they can share that information, and most agents don't pay attention to that clause in the listing agreement. So you can say, well, look at your paragraph such and such. What does it say there? Oh, if it tells you can share with me, then tell me, what's your highest and best right now? I'll see if my client can go higher. Okay. Because they can do that. But let's back up a little bit. So you've got your agreement here. So the parties agreed that this contract is modified as follows. If prior to the ratification of this contract, seller receives one or more additional written bona fide offers to purchase the property with the terms acceptable to the seller, other offers from which seller would receive an equal or higher net than the net reflected in this offer. And the reason it says net is one offer may be offering $700,000, but with $10,000 back in subsidy. Another property is offering $700,000 and no subsidy. The seller is netting more on the $700,000 without the subsidy. That's why it's net. Or it could be this one is $705,000 with $10,000 subsidy. This one's $700,000. So they're still getting, they're still making more off the $700,000 as opposed to the $705,000 with $10,000 in subsidy. Okay, that's why it's net. Okay, then this sales price shall automatically increase in the amount which generates a net to seller equal to X amount of dollars above any other offers net to the seller, not to exceed a maximum sales price of. So you start there. What's the maximum sales price, dear buyer, do you want to pay for this property? And oh, by the way, are you going to waive your appraisal rights? Or are you going to retain them? Because that's going to make a difference too in multiple offer situations. You might get negated even with the escalation clause if you're going to retain your appraisal. Again, you as an agent should never advise your client which side they should choose. They have to know what their lender says, what their finances are before they put themselves in this situation. Okay. So then backing up to the other sentence, it says, in this contract sales price shall automatically increase to an amount which generates a net to the seller equal to blank dollars above the other offers net to the seller. So if the other offer was 705 with 10 grand back, and your offer is 700,000, okay? So what's the seller's net? The seller's net is 700,000. So the escalation really doesn't come in play there because it's the net. So that's where you got to be careful about how escalation clauses are used. Some agents might look at that and say, oh, well, this one's 710, and this guy said he's going to give me 1,000 over this offer, or this is 705. He's going to give me 1,000 over, so I'm going to tell him he has to give me 7.6. Well, but that's not their net, okay? So that's where you want to be very careful about that. That's why it gets so confusing for people.
So net is without the subsidy?
The net's with the subsidy. What are they going to net?
Right.
Okay, I can offer 725,000 and want you to give me 35,000 back in subsidy.
Right.
That's going to be less than someone offering 700,000, right?
That's how tricky.
Yeah.
Because they don't know those people.
So then when they come back to you as the buyer's representative and you don't pay attention between net and then you got to be careful. And then again, you've got the appraisal down here. So if you do use the escalation clause, then the seller has to provide to the buyer this box here filled out. What's the escalated price? What are the terms of the other offer? Okay, and to include concessions and all that stuff. So that's why it gets very confusing. Most of us hate the escalation clause. We prefer a highest and best offer. Any changes in sales price under this addendum will be effective and binding upon the seller and purchaser upon the ratification of the contract in this addendum at the above escalated price. Purchaser and seller agrees to initial these changes in the price and specified findings paragraph of the contract upon request by either party. So if there is an escalation clause and you work it out and it's agreed to, and then there's a price set forth, if either party asks you to initial the page 1 of the contract, then you do it, okay?
So are you meeting the same number? Is that what you're trying to do with the escalation?
Well, ideally what the escalation is doing is saying if all things are equal, let's say 5 offers come in, they're all at 700,000. 4 of them just offered the 700,000, and maybe their home inspections and all that are all roughly the same. I come in with an escalation clause that says I will pay 2,000 above the highest offer. Okay, then in that case, I would be paying 702,000. All things equal with home inspections and other contingencies. But when you've got multiple escalations, multiple subsidies, multiple people keeping the appraisal, waiving the appraisal,
Right.
So if I had 5 offers with 5 different sales prices and 3 of them have escalations,
They're not common though, are they? Escalations?
well, in areas where there's multiple offers, they can be.
Yeah.
So when I sold a house in Pemmon Hills years ago, we had 10 offers,
Yeah.
5 cash, 5 contract.
Ooh.
My clients, lived 2.5 hours away, so I met them in Charlottesville. And so I took a copy of everything with me and I said, here's 5 with financing, 5 cash. He goes, I don't even want to look at the ones with financing, put those aside. Of the 5 that were cash, 3 had escalation clauses. And so he says, okay, let's just look at those, put those aside. And then I said to him, if we try to have them go back and forth escalating, we're going to be here all night. So let's call these 3, because 2 had said no appraisal. So we called all 3 and said, we need your highest and best in the next 15 minutes in an email to me in writing, in an email from your buyers in an email to you forwarded to me. Okay. Because we're going to sit here at the table, we're going to fill it in. And as soon as I get back to Northern Virginia, I'm going to send it to you for your signature. So no escalations, highest and best, and 2, and I'll say the one who did not waive appraisal, the other 2 waived appraisal. So he dropped out right away. So that left 2, given their highest and best, and both waived appraisal. And then that was easy. It was the same, you know, you had the highest and best, you win the deal.
I just had a contract that they waived the inspection. I was like, I like these. I like these contracts. I'm gonna start selling on flips.
So FHA financing, like conventional, you know, pretty much all the same language, alternative financing, automatic extensions, financing, the appraisal provision, here's what's different. The FHA mandatory clause, amendatory, because it's amending something, it is expressly agreed that notwithstanding any other provisions of this contract, buyers shall not be obligated to complete the purchase of the property or to incur any penalty by forfeit of deposit or otherwise, unless buyer has been given in accordance with the HUD, FHA, or VA requirements, a written statement by the Federal Housing Commissioner, Department of Veterans Affairs, or direct endorsement lender setting forth the appraised value of the property not to be less than. So normally this pair matches what your page 1 on your contract says. Buyers shall have the privilege and option to proceed with the consummation of this contract without regard to the amount of the appraised value. The appraised value is arrived at to determine the maximum mortgage the Department of Housing and Urban Development will insure. HUD does not warrant the value or the condition of the property. Buyer should satisfy himself or herself that the price and condition of the property is acceptable. So if you're offering on page 1 of the contract $700,000 on the property, well, you're doing an FHA, we'll say $400,000 on the property. You're doing an FHA, then here you would say $400,000. Okay, so so if for any reason the price changes along the way, then the maximum that you're going to have to be required to cover is here. Okay, so just make sure they parallel. It says, notice the dollar amount to be inserted in the mandatory clause is the purchase price as stated in this contract. If buyer and seller agree to adjust the purchase price in response to an appraisal value that is less than the purchase price, then this amendatory clause is not required. So that's what it means, is that if the seller agrees to reduce it because the appraisal came in low, then the house is going to be sold for less than that. Okay.
So that's when you use it, right?
Well, you put it up front right away that if it doesn't come in at least at 400,000,
What
for
they're
example,
asking for.
right, what the sales price is, right. Now, someone may offer 410, for example, because they might have $10,000 in their own money. So they might offer 410, but they're saying it has to come in at 400,000. They can certainly do that. Yeah, okay. So appraisal contingency procedures, same thing as before. You have your options, you have your negotiation period. Now, wood destroyed insect inspection, fences and outbuildings shall be included in the inspection and certification, where with conventional, they're not, but VA and FHA, it's part of the wood destroying termite inspection.
So VA and FHA is fences and outbuildings. So
Correct.
conventional is not?
Mm-mm,
Oh, I didn't know that.
mm-mm. And in fact, the VA and FHA, if the fence is even dilapidated, VA for sure. I've been in a situation they've demanded that a building be torn down before they let it close because a shed was in a dilapidated state, you know. And in that case, what happened was that the seller lived out of town. The buyer who I represented, we signed an affidavit, took pictures, and said that once it's closed, he will take it down because he's a contractor. He didn't want it anyway on the property.
Yeah.
But the seller, so then they had the seller give a credit to have it cleaned up, you know. So the seller gave $100 credit to the buyer to clean up the shed, you know, type thing, to get rid of it, to satisfy the VA to let the loan go forward. Otherwise, the VA would have had to have an appraiser say that it had been cleared out of the way. And it just wasn't in the seller's bandwidth to come and physically do it or the time frame of the deal to close. So sometimes you can do things like that. But if a VA, FHA, any lender says there's required repairs, then they need to be fixed. I was doing a refinancing on the house I owned in Falls Church. And I had 6 door-like windows off my family room onto the deck. 2 of them functioned in open French doors. And they had the little blinds and the pane. So it looked like 6 glass doors, but 2 of them opened. And they had screen doors on them. So the screen doors locked. The doors had a deadbolt and a turn knob. So 3 layers of security to get through them. Well, the deck had been a Trex deck and the sun had burnt holes through it. So we were
I didn't
refining.
know that they were supposed to.
Yeah, they weren't supposed to, but they did. Very hot sun. So, and we got the money from, you know, reimbursed from the company. But I needed some money I was going to extend the deck and stuff. So I was refinancing.
Oh,
So what happened was the VA appraiser would not let the loan go through unless I boarded up, put a board across the windows. Well,
mhm,
that would have required nailing through the siding.
uh-huh.
And because it was a really long, you know, 6 doors, 30 some inches wide, you know, across. But what the appraiser had written in there that it was a sliding door, and they weren't sliding doors. So I was able to take pictures of all the locking mechanisms, submit a letter, and then the appraiser came back and the lender actually released it to close. You know, said that I'm getting the money to finish off the deck and is what had happened. So sometimes you can close without the repairs actually being done. You just have to do the paperwork to make it go through.
I
Okay.
think, I had a friend who bought on a VA loan, and he bought up in Maryland to a realtor that did mostly military loans, and it was shocking that that house got through a VA inspection, because I mean, it was just a mess.
That surprises me.
So
So VA
somebody was paid off, and
Yeah.
I think if she had been, somebody should have turned her in.
Yeah.
Because it was just like mind-boggling.
Yeah, a VA appraisal is almost like a home inspection.
Right.
They're very detailed. Your systems have to be in perfect working order. I mean, the house has to cool when it says it's cooling. It doesn't have to be moderately cool, it has to work. And if your roof or your appliances or your HVAC or hot water is on the last year of its life or close to it, they may not loan on it. So
Like the guy had well issues, he had all kinds of
Yeah.
issues.
right. So, you know, you can be rejected for VAs based on that. And that's why sometimes you might see in a listing might say no VA or FHA loans
Yeah.
because the seller doesn't want to deal with something that could be bad fencing or something,
Right.
or knowing that the roof is 25 years of a 30-year, you know. So anyway, so when you're doing an FHA,
So seller can say no.
yeah,
Okay.
yeah, it has to be in the listing.
It's gotta be in the
So
listing.
in your online listing, Jennifer asked, the seller can say no VA. Well, what it says, instead of saying no, online in Brightest is acceptable financing. So then you would check,
He can refuse.
right, you would check conventional or cash.
VA,
Okay.
right, VA or FHA,
FHA. So when you do an FHA loan,
that's 3% down.
you're 3.5. Yeah, your client has, there's some that are 100%, but they're rare. When you're doing an FHA loan, your client has to be given this document. That's the only one that has to be given this document for your protection, get a home inspection,
Oh, really? We don't have to send, it's only for the FHA?
only for the FHA. If you go back to your contract, on the next to the last page of your contract, where it says what addendum are attached, it says for your protection, get a home inspection with an FHA loan.
Oh, okay.
I mean, it doesn't hurt to give it to your client, but it's only required on FHA.
What about now USDA? That's 1,000 down, right? Now we do rural loans where I live.
Well, that's a lender thing, and it's whatever.
That's like VA. USDA is just, they take longer to close.
Right. Yeah, USDA, it's in rural areas. And again, that's lender, it's where the money's coming from and stuff. What is that? Okay. Home inspection. Home inspection has two options. One is number one here, home inspection with the option to negotiate repairs or void. Okay. Then on page 2, home inspection with the option to void only. So don't be unethical. Don't use void only if you're trying to win a deal on a multiple offer situation and you're fully intend to go back and ask for repairs. It's just bad form in my opinion. Okay. And don't tell your clients, oh, well, we'll do void only, but we'll still be able to negotiate because we can just ask for it. Anything's possible. Yes, whereas that's true, it doesn't mean that the seller is going to agree.
You could cover yourself by doing an addendum to completely waive the inspection so that you have it in writing, right?
Well, yes, you can, but so this one, years ago in multiple offer situations, in the heyday in the early 2000s, oftentimes agents would say home inspection for informational purposes only. So that's what number 2 is covering for us right now. You're doing it, you're either going to accept or void. You're not negotiating any of the items,
Yeah,
no matter who your lender is.
I'm doing that on
Yeah.
my A2 property. It's
Yeah.
just
Right.
It's already been inspected.
Right. So then the home inspection period, again, like most contingencies, the longer the period, the better for the buyer. The shorter the period, the better for the seller. Depends on the market. Most people use about 7 days. If you're ratifying on a weekend or on a Friday, you might put 10 days there to get a good week ahead of you. Home inspectors are busy right now. Even down here in Fredericksburg. Fredericksburg's a hot market too. So all you up in Nova, my hometown there at Falls Church.
Colonial Beach is hot, too.
There's a lot of areas that are hot in our area. So, and we're all getting a piece of that pie. So that's a great thing. And you're learning how to do that. Anyway, so upon inspection of the property by license, if applicable, well, in Virginia, you have to have a licensed professional insured inspector, okay, at the buyer's discretion and expense. Okay, the buyer chooses it. You can refer them to somebody and give them options. The buyer has to pay for it. The buyer has to pay for that inspection either prior to them showing up or while they're there, but they will not get the report until they pay their fee. So even though the inspector shows up, the buyer does not turn over money, the report does not get sent out, okay? So be very careful about that. Pursuant to the terms of the contract, seller will have all the utilities in service. If for any reason utilities are not in service, home inspection deadline will be extended until 5 days or whatever you choose. Again, think about the timing of your offer. You got weekends involved because the seller then has to contact the utilities to get them turned back on. If the result of such inspections are unsatisfactory to buyer and buyer's sole discretion, buyer shall deliver to the seller prior to the home inspection deadline an entire copy of the report and a written addendum listing the specific existing deficiencies of the property that the buyer would like the seller to remedy together with the buyer's proposed remedies. I'll get back to that in a second. An entire copy of the report and a notice to void. So either way, if you're going to ask for reparations or you're going to void, you have to send an entire copy of the home inspection report to the seller. Okay. If buyer fails to obtain an inspection and fails to deliver a copy of the report to the seller, or fails to deliver inspection addendum or notice voiding the contract prior to the home inspection deadline, this contingency will expire and this contract will remain in full force and effect with no home inspection contingency. So back up to number 1 here. It says proposed remedies. So let's say the shower head is broken. Oops, sorry. Oh, sorry guys. I'm boring myself. The shower head is broken and it's on the home inspection. And you have a home inspector that's and he just simply says the shower head's broken. He doesn't tell you why it's broken or what's wrong with it. They should explain why it's not functioning. Is it physically broken at the head? You know, does it just need a new shower head? Or is there a leak? So whatever it is, then your remedy needs to specify how that's to get fixed, okay? So if it's leaking, then the remedy would be to repair the leak. And let's say it's an older shower head. You could say repair the leaking shower head and replace the shower head and the arm and the faucet, whatever it is. Whatever the defect is, your remedy, you need to give the remedy. You just can't say defective shower head because you're not giving a remedy to the seller. You're not telling them what you expect to happen, okay? So let's say this is an ADT alarm and it's in a wall in my house, okay? And I say I don't want the ADT alarm system in my conveyances. Okay, so it's taken out, but there's a hole in the wall. Okay, the seller is not required to fix that hole in the wall because when I saw the house and when I did my home inspection and when I asked for the ADT box to be removed, the hole was already in the wall. It just happened to have a device sitting in it. Okay, now had I said remove the ADT box and I simply said fill in the hole, okay? And then they went out and got one of those expandable little covers that you can pop in with little springs that fit over the hole and they come in various sizes, then that satisfied what I requested. But if I intended for them to repair the drywall and repaint the whole wall, then I need to specify that so that you as a buyer coming back through, you representing your buyers, you as a buyer's agent need to make sure you're being specific with what you're asking for the repairs to do or the replacement. So the dishwasher is broke. You might not want the dishwasher fixed. You might say replace the dishwasher and forget about any fixes. The seller can certainly come back and say, no, we're going to see what's wrong with it and fix it. Okay, and that becomes a negotiation. You agree or disagree. You accept it or you don't accept it, you move forward or you void, okay? So just be very careful. A good home inspector, I know you guys may know other ones, but I know Donofrio and Associates, US Inspect. I work with both of those groups for nearly 20 years now. They both give specific details on the defects and they give a little summary sheet. So it makes it really nice either to attach that summary sheet as an exhibit, especially if you're going to do all the items, or you pick and choose which ones and cross the others out. Or you can cut and paste them into your removal, which we'll get to in a little bit, okay? There's always a negotiation period. Now, those who may have been agents before or from other states, this negotiation period is an entire period for both parties to negotiate. It's not my turn, your turn, my turn, your turn, which Virginia used to be up until probably like 5 years ago or so. So 7 days is reasonable, 5 to 7 days here, because what happens is the buyer's agent and the buyer have to do the home inspection. They get the report, they analyze the report, then they have to put their request together on their inspection contingency removal, okay? And then they have to send it over to the seller prior to the contingency expiring or by 9 p.m. of the date that it expires. And then at that point, whether you choose here, let's say we choose 5 days, that means the buyer and seller have 5 days to negotiate that document. And it does not have to be written. The negotiation does not have to be written. To negotiate a mutually acceptable written addendum, yes. When you finalize it, you need it in writing, but you don't have to spend that 5 days writing up your request, sending it back. The two agents can get on the phone and I can call up Jennifer and say, hey, Jennifer, my clients agreed to 1 through 5, but they're not going to do 6 or 7, and we'll do 8, 9, and 10. Do you agree with that? Let me check with my sellers. Well, no. Or we check with my buyers. No, my buyers want item 6 done. Okay. Yeah, they really want, okay, back and forth. So we've solidified in that negotiation period, we had a meeting of the minds, then we put it in writing, then we send it over. That's the most efficient and clean way to do it. Back and forwards in writing, crisscrossing, it makes a mess of the paper. You can do it both ways, but the verbal negotiations, and I say verbal, you're also memorializing them in an email. Anytime you have a verbal conversation with your client or an agent on the other side in a deal, you should always memorialize it in an email back to them, just memorializing what you said. So if there's any misunderstanding on either one's part, they have a chance to come back to you and say, no, that's not what my understanding was. Okay.
Don't let them bring their family into it.
Yeah.
I have one electrician, electrical issue, and I had a certified electrician and licensed. And then I had the buyer's son was a master electrician, but he didn't have a license or anything. So he had to give us all his 2 cents, and it just went back and forth.
Right. So, Jennifer's like, be careful about bringing family members who may know something about electricity or plumbing or whatever.
Yeah, if they're not licensed
They-
in
yeah,
that state.
yeah, they have to be licensed in that state. And so you can't have a DC certified electrician coming over into Virginia and working on your home, for example. Okay. Because when we get to the removal, it says by a professional licensed person. Now, once the negotiation period is over with, and let's say there's a stalemate and neither party can agree, then the buyer has so many days, and generally you put in 3, that covers weekends. But again, it can be anything, it's negotiable. The buyer then has 3 days to decide whether they're going to move forward or void, okay? So here, the same time, home inspection period, there's no negotiation, there's no cooling off period. It is what it is. I get the inspection, my buyer and I go over it. Are you happy with the house the way it is? You're not concerned about any of these issues? Yeah, they seem to be minor, or maybe there is a major issue. Maybe they discovered that there's, the roof is on its last leg. It's, 29 years of a 30-year roof and its shingles are starting to wear off. Then the buyer may simply say, no, I want to void. And then they follow the process to void. Radon testing, never, ever, 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 ever tell your client that, oh, this area doesn't traditionally have radon. It's a naturally occurring gas. It can happen anywhere in any time. You can be in a neighborhood where the 10 houses around you all have gas and yours doesn't, and vice versa can also happen. So be very careful about that. One of the home inspectors from Donofrio and Associates in a wood 3-story high condo that was wood with a shaft where the dryer vents went. There was radon on the 3rd floor of the condo. Okay, so it can happen. So you give your client the radon usually costs between $135, $150-ish. The buyer just needs to understand that the radon is naturally occurring. And now what happens is that the radon is tested and then the seller needs to fix it, and we'll get down to that in a minute. During the testing guidelines, the seller has to agree to follow the EPA guidelines, okay? And it's recommended, so you as a listing agent need to call your seller up and say, I've heard from the Radon people, they're gonna come by your home and they're gonna bring the box tomorrow at noon. That means 12 hours prior to that, they cannot leave windows open, they can't leave the doors open, garage doors open. They can have normal in and out, but they can't stand there all day going in and out of the house trying to air the house out, okay? Whole house exhaust fans and smaller fans near the testing site must not be used. One of the inspectors told me he went in and found a fan that they forgot to move it that morning before they went to work, and the people had stuck a little house fan right next to the radon box. So that means that should the radon professional indicate in writing that these requirements have not been met, then the seller shall pay for a new test under the buyer's direction, and the radon inspection company shall automatically be extended so many days afterwards, okay? So the test has to be done, the seller has to pay for it. If the radon report confirms the presence of radon that equals or exceeds the action level established by the EPA, buyer at the buyer's sole discretion shall deliver to the seller prior to the radon testing deadline an entire copy of the radon report and written addendum requiring seller at the seller's expense prior to settlement to mitigate the radon condition by contracting with the certified person, the remediation company firm, to reduce the presence of radon below the actual level established by the EPA and to deliver to the buyer a written retest. Results performed by the buyer elected radon professional and following the required testing guidelines. Or they give an entire copy of the report and a notice to void, okay? If the buyer fails to obtain the inspection, fails to deliver a copy, then the contract remains in full force and effect. Again, negotiation period, and buyer has the right to elect, okay, to void or not void, or decide what they want to do. Now, I think I went over this with you guys during the listing. This is a great sheet for you as listing agents, because the information you're getting, and your seller doesn't sign it, you're getting all this information at the time of listing, and then you're going through and filling this out so that you post it online in the documents section so that a buyer's agent coming along can pull this document down and replicate everything's in here, cutting and pasting it, and you can convey to them everything they need to know about the offer. Isn't that neat? Isn't that a really nice, neat thing? I've always kind of pretty much done that just on a sheet of paper, detailed out what was going on. And okay, inspection contains removal. We were just talking about this, okay? So now we can have multiple inspections. It used to say home inspection. Now it simply says inspection, because you can have more than one inspection that has different contingencies. So down here, you can have home inspection, a radon inspection, private well and septic, or something other. You might be checking an arborist to come out to check the trees on some property you're buying, for example, okay? And you've built that into your offer, so you're having an inspection done. Again, this is a blank canvas here, but it's not all of that much room. So when you do have things, you can make a separate sheet of paper. It can just be a blank document, or you can use an addendum, just declare up on top what it is. And then you detail out what your cure is, okay? So unless otherwise specified above, all repairs are to be performed by a contractor licensed to do the work of the required work, and receipts or other written evidence that the repairs have been completed will be provided prior to or at buyer's final walkthrough inspection. This addendum shall not alter, modify, or change in any other respect this contract except as modified herein. All the terms and provisions of this contract are expressly ratified and confirmed and shall remain in full force and effect. So this document, if you have conditions that need to be met and changed, in the home inspection. Then they have to have a professional in your area. The professional has to give them a receipt to the seller. The seller has to provide it to the buyer, at least by their final walkthrough. I always ask the seller, send me a copy of it in the email. I send it on to the buyer's agent. The original, I tell them, you know that drawer we talked about that has all the stuff in it? Just put it in there so that the buyer will have it when they move in case there's a warranty on something. The buyer has the original paperwork. The seller's paying for it, but the paperwork goes to the buyer, okay? Cyber notices, it's just letting everybody know that there's all kinds of cyber crimes out there, and you can't hold us responsible if you give your money to somebody, okay? Affiliated business disclosures. Every office has a different relationship with certain vendors, and we just have to disclose that under the laws of ethics that we personally, as individual agents, are not necessarily getting money directly. We're not getting money directly from these entities, but they have relationships with our offices, okay? And they also declare, like in the cases with the title company, they're declaring up front here what their fees are, okay? And then down below, they're declaring what insurance is based on the prices in the thousands, okay? Whether your client uses any of the services or not, and even if you say, well, my client is going to use XYZ, title company, ABC, a lender, nothing has to do with your Keller Williams office, that's fine. They still need to fill this out. Because what about if you're in a deal with an agent with the Keller Williams office that's in our group and we have these affiliated services, okay? They just have to do it as part of your required documents to fill out, okay? I think some of the documents are going to be updated soon, but now this is not a blank one here for Fredericksburg. Summer just sent one she had handy there. It was filled out. But basically, your client's name, who the agent is, the property address it's going to. Now, when you're filling out a buyer's agreement for a buyer's agency, you don't know what property is going there, so just put their own property. The idea is that they have filled this document out, okay? Okay, listing agreement amendment. So you have a listing agreement with your clients, okay? So the amendment is made on, so what date? Some date after you've been listed. It could be before it even goes on the market to choose. So you have an exclusive right to represent the listing agreement, okay? For land or unimproved property, improved or unimproved. Or it's for the lease, okay? Landlord. Okay, so it's between the seller and the broker, or the landlord and the broker, for what property. The purpose of this amendment is to modify certain provisions of the listing agreement as specified below, except for those terms expressly modified herein. This amendment shall not alter, modify, or change the listing agreement in any other aspect. So you're only modifying what you're checking below. So you're modifying the listing price. So let's say you took a listing 7 months ago and you weren't sure, so you said we'll be at 800,000 or below, and it's ready to go on the market. It's been a hot market in that area. Your comps are saying that the homes are going for 815. Then you would modify your listing agreement to say the list price is now 815. Or you're about ready to expire, so you check number 2, and you're going to extend your listing period until December 31st, 2020, as opposed to August 20th or whatever. Broker shall enter or re-enter the listing information in MLS on. So maybe it was temporary off for some reason, like COVID. Some of us had to take our properties off, for COVID or whatever, or your client gets sick, or another could be, your modified commission. Maybe the sales price is too high, and your client, because they own a lot on the house, so maybe they can't now pay the 6% commission, or if they're willing to lower the house by $10,000, but they want the commission changed to 5.5% or 5%. So that's what you could do under other, where you're changing the amount of the commission. Temporary off, seller or landlord instructs the broker to temporarily suspend the marketing and showing of the property effective such and such day. So you're taking off the market for some reason. Maybe someone's sick, maybe someone's had surgery, or maybe there was a flood in the home and now they have to get it fixed, okay? A tree could have fallen through the house. Now they have to get it fixed. Withdrawn from MLS. So the seller is instructing the broker to withdraw the property from the MLS. And what day is it effective on? It does or does not instruct the broker to market property as the office exclusive after withdrawing of listing from the MLS. So they're asking you to take it off the MLS, but still market it within your office only. It's not often you're going to have that, but there's a provision there if you do. Now, when you're going temporary off, not that most of these pirates out there are going to look, but you can go to the agent notes, and if you think warrants an explanation as to what's going on, but you can certainly say, listing agreement is still in full force and effect. And sellers requested that you not call them. All calls directed to the listing agent, okay? There's a lot of agencies out there will start calling your clients. So cancellation, early termination, listing agreement is terminated effective, okay? And the seller or landlord shall pay broker early termination fee before broker executes any release of agreement. So the seller wants to fire you, they want to fire you tomorrow, and your listing agreement says they owe you all your expenses that you're going to detail out, or they owe you a flat fee of $1,000. Whatever your agreement says, that's what they owe you before you execute the release. Notice, it's just as for the lease. It can be anything. I'm giving you notice to clean up the dog poop in the backyard. For example, landlord to tenant, okay? Notice voiding the contract. So if you want to void the contract, that you use the notice to void and the release. So just what does it state? Who's voiding and why? Okay. So what paragraph? I'm voiding based on the home inspection contingency, for example, or I'm voiding based on the home sale contingency. What is the contract? What is the contingency? What's the addendum? What paragraph is it? Okay. Important information regarding the notice. To be effective, notifying party must deliver the notice to the notified party or their authorized agent pursuant to the delivery paragraph of the contract. So you always go back to the contract, and under the delivery paragraph, who does it say gets the notice? Okay. If the other agent has chosen that it goes to them and their buyer, make sure you send it all your communication in that regard. You just can't arbitrarily say, I'm just only going to send it to a listing agent. If their delivery paragraph says Deb Roof and Daphne Martinez and Summer Holloway, then that's who I have to send it to, because that's what the delivery paragraph says, okay? This notice is not a substitute for the release, nor does it also authorize the disbursement of the earnest money. So remember, it's a notice to void and the release. They go hand in hand, okay? Seller and purchaser will comply with the terms of the voiding of the contract. So if it's voided, and right before class started, someone came to me and said that a seller is refusing to sign the release. They can't refuse. If it's being voided based on a legitimate time period of a contingency by a seller crossing their arms and acting stubborn, when they go before the judge, they're just going to be slapped with a lot of fees they're going to have to pay. Okay, so that agent needs to take the paragraphs in the contract to that seller and have them read them and make them understand that they cannot argue against voiding when it's in the time frame. As a Virginia buyer, you can void on HOA docs and condo docs long as you've received them. You never have to crack them open in any way, shape, or form. You can void the moment you get them, okay? I mean, literally the moment they come in, you send out the void and the release, and the seller cannot fight it. Many have tried, okay? In leases, you've got the pet addendum, okay? So if the landlord's going to allow a pet to be on the property, then you should have them fill out a pet addendum, what the extra security deposit is. This should also be online in the listing. There should be no confusion as to the fact that when it comes to the time of the lease, that the tenant should know that they're expected to pay a separate deposit. It details out in full what all their rights and responsibilities are with regards to the pet, to include defleeing and deticking, cleaning carpets, all that on exit. It's all here. It should not be a surprise. I always tell agents working with landlords, when you're getting ready to change over tenants, the landlord should send them a copy of their pet addendum, reminding them of what they signed and agreed to. Okay. Private well and septic contingencies addendum. So water potability test. If this property is on a private well, as indicated in the utilities, water, sewage, heating, and central air conditioning paragraph of the contract, then the seller at the seller's expense or the buyers at the buyer's expense will deliver to the other party on or before settlement a report prepared by a Virginia certified laboratory dated no more than 90 days prior to settlement, ordered through the local health department or an insured private company. Most of it's usually through the health department. We order these, indicating that the well water is free of contamination by chloroform bacteria. Any such contamination indicated shall be remedied by the seller at the seller's expense, and the well shall be retested at the seller's expense after remediation. Seller shall deliver to the buyer on or before settlement a report issued by a Virginia certified laboratory indicating that the well water is free of contamination. So if I'm representing a seller, I tell them, you're going to be responsible to fixing it anyway. The potability, go ahead and have it tested so you know. And normally, if you are living off of well water, you should have your well water tested periodically to make sure that you're okay too. Okay. Well and well water inspection contingency. Okay. So if you have a contingency period, the contract is contingent or not contingent upon a well contingency period. Buyer's discretion, expense, and sole risk of damage to the well and or property shall retain a professional and insured inspector to inspect the well and or well water. This is not the potability test. This is the actual well. So, and it says the buyer's discretion, expense, and sole risk of damage. So you as an agent do not carry the mantle of responsibility when the company who your buyer has hired damages the seller's well. It's their responsibility. Okay, the buyer and the person they hired, not you as the agent. You are not responsible. If the results of such well inspections are unsatisfactory to the buyer, in the buyer's sole discretion, buyer shall deliver to the seller prior to the deadline an entire copy of the report and a written addendum listing the specified existing deficiencies of the well or well water that the buyer would like the seller to remedy, together with the buyer's proposed remedies, or the report and a notice to void. If seller fails to obtain a well inspection, failed to deliver the property, then the contingency expires and the contract moves on full force in effect. Negotiation period, buyer's election. Septic. Alternative septic maintenance contract. Seller does or does not have a maintenance contract. You don't know that. They have to answer that question themselves. Do you have a maintenance contract? And if they do, specify it. Then you've got the inspection contingency. The contract is or is not contingent upon inspection. How many days? Now, make sure you're given enough time to get these people lined up. And then it's the buyer or the seller. So if you're representing the buyer, we always put that we want the seller to do an inspection and fix it, right? You want to put all that cost on your seller. The seller wants to put the cost on the buyer. It's all negotiable. Okay. I've seen it once where they did a 50-50 split. Okay. The seller's expense and sole risk of damage to the property shall retain so-and-so, a Virginia licensed insured septic system installer, operator, on-site soil evaluator, or professional engineer, septic inspector, to inspect the private conventional on-site sewage system or private alternative on-site sewage system. Prior to septic inspection, seller will remove any landscaping, personal property, or improvements that impedes the septic inspection. If for any reason such impediments are not removed, septic inspection deadline shall be extended until they get removed. The party responsible for the expense and sole risk of damage to the property shall select the inspector. So whoever's paying the bill gets to select the inspector. Okay. If the option for seller is checked above, okay, number one, if it's the seller shall conduct the septic inspection no sooner than the date of ratification. Seller shall deliver the inspection report subject to the buyer no less than blank days prior to the septic deadline. In the event seller does not deliver the septic inspection within such time, buyer may, prior to the septic inspection deadline, order a septic inspection on behalf of the seller at the seller's expense, at the seller's sole risk of damages, and the inspection deadline will be extended for so many days, or they deliver a notice to the seller voiding the contract, or they pursue all legal and equitable remedies. Okay. Such septic inspection shall include a walkover visual inspection, probing of the drain field area to check for saturation for a conventional system, or visual inspection of the alternative treatments, or an alternative treatment in addition to the following inspections will be conducted. Check all that apply. So they have to do what's in the paragraph, and then they can pumping and inspecting of all treatment tanks, excavation as necessary to visually inspect all distribution boxes if present, test all pumps and controls, and evaluate the function of the pumps and the pressure dose of the dispersed system. If the septic inspection report indicates any recommended repairs, maintenance, or replacements of the conventional system, alternative system, buyer shall deliver to seller prior to the deadline an entire copy of the report, okay, and the remedies, or the entire copy of the report and avoidance. Except as provided in paragraph 2B2 above, if buyer fails to obtain the septic inspection, fails to deliver a copy of the inspection report to the seller, or fails to deliver the inspection addendum or notice voiding the contract prior to the septic deadline, this contract will expire, and this contingency will expire, and the contract remains in full force and effect, which means the buyer is accepting the septic contingency, the septic system as it is. Negotiation period, buyer's election. Okay. Release the sales contract. So you always, if you're getting out of a deal and you represent the buyer, you want to make sure you get this over there so your buyer gets their earnest money back. So you fill out all the top according to what it is. Then it says paragraph 1, buy sales contract ratified on July 7th, 2020. Purchaser agreed to purchase and seller agreed to sell 1234 Main Street. Seller and purchaser wish to terminate entirely all of their respective rights and obligations. Okay. Seller and purchaser mutually terminated entirely. Okay. When it comes, so what you're really concerned about is paragraph C. When the purchaser is terminating based on any contingency, their money is coming back to them 100%. So if their deposit was $2,500, $2,500 to the purchaser. Only when it's not negotiated, not negotiable, there's contingencies and stuff, fighting back and forth, it's when these other fields might be filled out, okay? Or if the purchaser is telling the their agent, hey, you've done a great job. I'm sorry we've lost this deal. I'm going to give you $100, or, you know, they could do that. Okay. So it'd be the purchaser and the selling company. But generally speaking, all the money goes back to the purchaser. Okay. Even if they're going to turn around and buy another property, and even if they tell the title company, oh, just leave the money in your escrow account, don't return it to me because I'm going to go out and get another property in the next day or two, the attorney's office or the title company just changes it from 1, 2, 3, 4 Main Street to 5, 6, 7, 8 Fire Hydrant Street or whatever, you know. They just change the name of what it's assigned to. The cost incurred for the title examination, appraisal, and survey will be the responsibility of the purchaser. In most cases, the title companies, when something falls through, they don't require payment, but some may, and it's the responsibility of the purchaser, okay? Unless there's a contingency and then the court judges otherwise. The release shall be construed, interpreted, and applied according to the law of Virginia, and it shall be binding upon and shall ensure the benefit of the heirs, personal representatives, assessors, and assigns of the properties. Okay, so it goes along, you know, with if you had a property and one of the parties died, then it goes along with their heirs. This release constitutes the entire understanding among the parties and may not be modified or changed except by a written instrument executed by the participating parties, and all parties understand its contents. There are a few brokerages out there that demand that the broker sign this. This is not legally required. Years ago, some of our beloved brokers were doing that, but it's between the parties. So VA contingency financing, paragraphs pretty much the same, acceptance, voiding, appraisal. Here's where it differs. Paragraph 5, VA notice of value. It is expressly agreed that notwithstanding any other provisions of this contract, buyers shall not incur any penalty by forfeit of earnest money or otherwise be obligated to complete the purchase of the property if this contract purchase price or exceeds the reasonable value of the property established by the Department of Veterans Affairs. Buyers shall, however, have the privilege and option to proceed with the consummation of this contract without regard to the amount of reasonable value established by the Veterans Affairs. So basically, if the buyer has the money, they can continue on like with the other appraisals. But if you notice, there's no time frame in here. For the appraisal time, okay? They have time to do the appraisal regardless of a time frame. So if the appraisal is less than the sales price, just like before, the buyer can elect, okay? Negotiations. In the VA, the seller has to pay for the inspection and for the fixes. In the others, the seller may pay for it. The buyer may pay for the inspection. Seller pays for the repairs and fixes. But in the VA, the seller has to pay for the inspection as well. It doesn't mean that the buyer can't choose the company, okay? The buyer can choose the inspection company. The seller has to pay for it. Again, lender repairs have to be taken care of. And that's the end of that one. Walkthrough inspection. I think we're gonna make it. I have 6 minutes left. So you're the very end of your deal. So remember, from the get-go, from the very beginning, you have 7 days before closing to do your walkthrough inspection. See, and an S up there. Got the S. Walkthrough inspections. Okay. So you as a buyer's agent, you're working with the listing agent. You say, oh, by the way, Mr. Listing Agent, when are your clients going to vacate the property? So let's say it's 4 days before closing. You might then go there that day, let them know you're going to do your preliminary walkthrough and you're going to check the systems that day. And then the day of closing, you'll drive by, you might go in and check and make sure, especially if the sellers have already left the property. And you go by the property and things are not done correctly and things are messed up or things aren't working according to your home inspection reports, or the plumber hasn't come to repair anything, then that's when you mark things off that it's substantially in the same condition, yes, no, or it doesn't apply, something's wrong, you put your marks down. You know, the dishwasher was never replaced. And then you find that it's sitting in the garage in a box. Okay, that's not replacement. Replacement means to install. It's got to be in the working order to be tested. So you have to notify the listing agent that, hey, you know, you got to get that installed. Okay, then you discuss what is our remedies. The seller is to correct the discrepancies without an escrow. You're going on faith that they're going to correct it. Sellers to credit buyer so much money. Well, again, a buyer cannot take credit unless their lender agrees to it. So be very careful using that one. Repairs are to be made and paid from the funds held in escrow by the settlement agent. Escrow funds are or limited to the, so are they limited to the seller's liability or are they not? Okay, so you might say we're escrowed $1,000, but when they get in there, they find out it's a $5,000 job. So if you're not sure what the price is going to be, then you would say are not limited to the seller's responsibility. The seller's responsible for the entire fix, okay? So when it comes to walkthroughs, it's not a 5-minute thing, guys. You have to make sure the washer's still working, the dryer's still drying, the dishwasher's still working, the toilets are still flushing. And when you represent a seller, you should hold the utilities on to the day after settlement. Therefore, you're fully covered. If the buyer does not do their job and get the utilities turned on, you are covered through the entire day of settlement. That if anyone doing a walkthrough on that day to test the system, they have water, electric, and gas if it's there, to make sure all that stuff can be tested. You don't want to be the listing agent representing a seller who turns them off on the day of settlement and the buyer does not do their job and turn them on the day of settlement. So the buyer might think, they might have an agent who doesn't go through with them all this stuff and how it pertains and how the whole picture works. And they think, well, I'm not going to move in for 2 weeks. I'm not going to turn my stuff on yet. Okay, you as a buyer agent need to counsel your clients that they need to have the utilities turned on the day of settlement, regardless of what time they're closing that day. The seller has them turned off the day after settlement, but if the buyer does their job, they get turned on the day of settlement and the seller account is closed, okay? I just put the one, protect your family from lead. You have to give this out for anyone who's looking at homes or doing a home that was built before 1978. And with that, we are done. Aren't you guys glad? Come on, talk to me, people.
That was awesome. Sorry.
So if you have any
Can
questions.
you hear me?
Yeah, go ahead.
Oh, no, I was just saying thank you. Appreciate it.
Oh, you're welcome. So having been students of mine, like Mariana would say, you guys are certainly welcome to contact me. And if some of you on your acting broker, assistant to the broker, but above all else, I'm your liaison to learn more about the documents. So feel free to, it's always best to text or email me first because who knows where I'm at, whether I can pick up the call or not. I do live in North Culpeper, so cell phone service isn't the greatest. But if we need to talk, I'll just call you back from the landline. I don't give my landline out because my father is hard of hearing. My parents live with us, and so it just makes it easier for me to call you. All right, any other questions or anything for anybody?
No, not
I have a
me.
question, but not related directly to the forms.
Go ahead.
We're changing the name with DPAR and everything. If we get, for example, a new buyer or seller between now and the name change, we keep using for example, in my case, the KW Falls Church.
Correct.
And what if you have to submit an offer in the meantime, the offer got accepted, but then the name change? What do we do? Do we have to do anything or you
No,
don't do
there's a
anything?
transition period.
Oh, okay.
There'll be a transition period. And you know, literally both names will truly be in effect, more than likely, but we're going to be marketing as KW United, you know, and, but yeah, there's always a transfer period.
Okay.
Once you get your license, whatever you know, what happens is when we do that transfer, your licenses, the broker sends all your licenses in, and then they get the new name change and they come back, and then you'll have one with the new name change on it.
Okay, thank you.
Okay? All right, everybody. Bye-bye.
Bye, thank you.